All right. This presentation is called Bulls Make Money, Bears Make Money, Pigs Get Slaughtered. And I named it that because I'm just going to limit my entries to those places where I had the double dot, at least the double dot. And in this situation, it's going to be a hypothetical 3 contracts. First target 5 cents, second target 10 cents. And after the second target is met, the third is set to break even if it goes down, or if it continues going in the direction wanted, it will be a runner, and we'll get out with something like a signal here, like if you've been long here and you got the bar above the thing and your indicators down below went negative. So here's our first double dot. So we go long here. I won't pick up my cursor, so I'm going to use trend lines so you can see what I'm talking about. Okay, so we're on this bar and we get our double dots. We go short and didn't go down very much, and we got stopped out. And then we got our double dots here. So we go long. One thing I like, the retracement down was 33%, pretty close to a Fibonacci number. And when we get down here, we have a cyan ball, which means the last high was strong, so it says get ready to go long at the next low. We have our cyan bar, which says this low didn't get down as much as the last low, and in fact here it didn't even get below 0. Now on this indicator down here, we have our cyan bar, and that's it. And on the price only, we have a cyan bar. So the 3 indicators I have, the top one is volume only. The middle one is a combination of volume and price. It's the volume with direction. And the third one is price only. And so I have all 3 things represented. So let's go to our next one. So now we lost 11 cents on the first trade. On the second trade we made 20 cents, so now we're up 9 cents. We get our double dots again, and on this trade we made the first 2 targets and got stopped out, so we made 15 cents, so now we're up at 24 cents. And on this trade down here, we don't have any indicators. Here we have the cyan bar saying this low couldn't push down as much as the last low. And on this one, we have a divergence with the price, and we have the cyan bar, which means this low couldn't push down as much as the last, and that's why we got in on that. So now we're up 24 cents. And on this one, we got our 2 red dots. And this one we made 15 cents. We got stopped out on the third, so now we're up to 39 cents. And what we have is cyan bar, meaning the last low was strong. So it says get ready, look for a short on the next high. We have a divergence, and we have the cyan bar, line, which means this high didn't have enough power to push it up past anywhere close to where it pushed it up last time. So there was a very weak push up. On this one, we have a divergence. And that's it on that one. And here we have on the price, we have divergence, and the cyan bar means it couldn't press as high. And so now we're up to 39 cents. Here we got our two dots up top. So we go long. We made 35 cents on this one. So now we're up to 72 cents. And the situation on this was, here we have the cyan bar showing there was strength on that last move higher. So look for a long at the next low. We have a divergence at the low. And here we have a divergence on the volume direction. We have the cyan bar, meaning this low couldn't push down as hard as the last one. And we have the cyan dot, which says that last move up was strong with this indicator. And here we have the same thing. We have the dot showing the last move up was strong. Look for a long at the next low. And we have a divergence at the low. So now we're up to 72 cents. And we get our double dots. We make 15 cents. We got stopped out on the third. Now we're up to 87 ticks. And the data on this long was, we had our cyan bar, meaning the last move up was strong. We have the cyan line, which means couldn't push this low down. In fact, this low couldn't even get below the 0 line. And on this one, we have the cyan dot, meaning the last move up was strong. And on this one, we have the cyan line, which means this low, it couldn't push us down as much as the last low, and we have our cyan dot. So now we're up to 87 ticks. So now we move to the next one. We have a double dot there, and we made 34 cents on this move. This was a 32-cent move up. Well, let me just review back a little bit. One thing I like to look at is the retracements down. If you look back here, you'll see the retracement down was 33 cents. We're close to a Fibonacci number. Here, the retrace down was 68%. Real close to a Fibonacci number. And here was 95%. But what I want to look at here is that this high was only 1 cent higher than the last high. So that's a double top. That's responsible for one of those dots. And here we have another double bottom, 1 cent within 1 cent of the last low. So it's a double bottom. And here we're down 49%, real close to a Fibonacci 50%. So that pops up frequently. This one was down 60%. Had our double dots. So here we don't have any indicators involved. This one we had the bar showing that this low couldn't get down as much as the last low. And for price only, we didn't have anything. So not a lot, but it was a nice move up. 32 points. We got 34 cents. Now we're up to 121 ticks. The next one, we have our double dots. We have a 62% retracement down. We made 15 cents. Our third one got stopped out, so now we're up to 136. And the date on this is that we have cyan dot to help us make the decision. Once again, the cyan dot, meaning the last push up was strong. And on price only, we have a divergence and the cyan dot. down here. So we're up to 136 ticks. The next one, we have our double dots going down. We made 21 cents on this 29-cent move down. So now we're up to 157 ticks. And here we had a bunch of stuff. We had our magenta line showing this low didn't have much power, hardly got above zero. We have the cyan bar, which means the last push down was stronger than the one before. We have a slight red divergence there, that's the red. And below that, on the volume with direction, we have the magenta bar saying this was a low, couldn't push as high as last time on this move up. Get the magenta bar saying the last push down was stronger than the previous one. And down at the bottom, we have our price only indicator giving us a divergence, and we have the cyan dot. So now we're up to 157 ticks. So we'll move one more. Here we had a big move down, and then we have a 28% retracement up. We have our double dots, and we have the magenta bar saying this high, this indicator couldn't push this high as the last one. We have a red divergence. We have the cyan bar, meaning the last push down was stronger than the previous push down. And down at the bottom, the price only, we have the divergence, the red. We have the cyan bar. We have the magenta line showing this push up was weaker than the last one. And we made 26 cents on this, and this move was down 32 cents, and we made 26 ticks out of that move with the three contracts. So now we're at 183 ticks, and the time is about 11:30, so it's 2.5 hours, and we got 183 ticks. And I'm not going to do any more because I'm tired of adding this up, but I'll just briefly show you the rest of the day. You can see we had more, and we had several of these calls through the day. Here's 12 o'clock. Here's one. Here's one. Here's one. Double dots, double dots, double dots. And so we had numerous occasions where we get the double dot and we get in, and it reduces the risk, I believe. And it would have been a lot more if I'd finished the day, but just for the first 2.5 hours, we got 183 ticks using this system. And that's why I call it the pigs get slaughtered, because I didn't try to get any of the big moves. I just went with the smaller ones. Some of them were pretty good, 35 cents here and whatnot. And but at the end of the day, $1,830 for 2.5 hours work.